More and more wealthy families in Dubai are moving parts of their assets to Swiss private banks. This isn't just about prestige or tradition, it's about practical reasons like better protection, access to global investments, and long term planning. In this video, I'll explain why this shift is happening, how Swiss banks fit into a Dubai based structure, and what this move means for long term wealth, succession, and compliance. If you or your family are thinking beyond Dubai, this will give you a clear picture of how Switzerland can support your global wealth strategy. Before we start, my name is Shiraz Wahid and I'm the co founder at LepidusWealth, where we have helped many of our clients and families with trust, foundation, and other asset protection strategies in Dubai. If you would like my help in doing the same, you can apply for a free and customized asset protection plan by clicking the link in the description below. The first reason for the shift is continuity of service. Swiss private banks have long history of serving international families across generations. Their relationship managers are trained to handle sensitive situations such as succession planning, family disputes, or relocating beneficiaries. That's very different from transactional banking in Dubai, where the focus tends to be on compliance and corporate volume. Another important factor is access to global asset classes. While Dubai is expanding its investment offering, Swiss banks still have deeper access to European private equities, structured products, and global portfolio strategies. For clients seeking a European wealth management touch, this access becomes a key differentiator. Privacy also plays a key role. Although banking secrecy in Switzerland has changed significantly over the years, there is still a culture of discretion that appeals to families managing wealth across multiple jurisdictions. Especially when the foundation or trust are involved, this added layer of privacy makes Swiss Bank a preferred partner. But one of the most strategic reasons we are seeing is the ease of integrating Swiss banking with holding structures like DIFC Foundation or offshore companies. In the past, it was more difficult to open accounts for these entities in Switzerland. Today, with better onboarding processes and more international cooperation, several Swiss banks now offer dedicated onboarding desks for Dubai based structures. This matters because it gives families more flexibility. For example, a DIFC foundation can hold assets in Dubai, but also operate a Swiss custody account for global investments. That means you get the best of both worlds, a locally compliant structure with international banking reach. Tax efficiency is also part of the equation. While Dubai remains a tax neutral environment, families are increasingly being advised to prepare for global reporting requirements as well. Swiss banks have the infrastructure to support common reporting standard, that is CRS compliance, as well as FATCA reporting for US person and complex tax residency cases. That gives clients more confidence when engaging with advisors in Europe or North America. There is also a risk management angle to this trend. Many families don't want to keep all their assets in one banking jurisdiction. Even though Dubai is stable, spreading risk across 2 to 3 top tier financial centers is seen as prudent. Switzerland, with its robust legal system and regulatory oversight, remains one of the top choices for that diversification. In some cases, moving assets to Switzerland is not about shifting wealth out of Dubai. It's about creating a balanced structure. A Dubai operating company might be used for business income, a DIFC foundation for long term holding, and a Swiss bank for custody and investment management. Each element plays a key role. This approach is particularly attractive for family offices, especially those serving multiple generations or managing cross border estates. They want seamless execution, strong reporting tools, and trusted counterparties. Swiss banks continue to deliver in all three areas. There is also the human side of the equation. For many families, the relationship manager in Switzerland becomes a long term advisor, someone who understands the family values, legacy goals, and risk preference. That sense of stability can be difficult to replicate in a fast growing financial center like Dubai, where turnover in relationship team is often higher. We are also seeing an upward trend in the dual structure arrangement. For instance, a client may use a DIFC SPV to hold shares in a Dubai based operating company, while the same SPV opens an account in Switzerland for reinvestment into an international real estate or fund portfolios. This structure satisfies both the local compliance requirements and international wealth deployment objectives. Another subtle but important reason families choose Swiss Bank is the caliber of their reporting system. For family offices working with external auditors or cross border tax professionals, The clean, well-structured statements from Swiss banks make the life far easier. That reduces the administrative burden and ensures better oversight. Some clients also appreciate the discretionary mandate offered by the Swiss banks. Rather than managing every trade themselves or appointing a family member to oversee investments, they delegate to a professional team within the bank, with clear risk limits and agreed benchmarks. This not only simplifies the governance, but allows the family to focus on their business or philanthropic goals. Of course, not every Swiss bank is the right fit. The selection depends on the account size, risk profile, and the type of structure used. Some banks have dedicated desks for Middle East clients. Others are more selective but offer boutique level service with tailored mandates. It's worth taking the time to match your needs to the bank's strength, whether that's investment strategy, onboarding efficiency, or succession planning support. If you're building a long term plan for your family, this shift towards Switzerland may be worth exploring. The key is to structure it correctly from the start, aligning your foundation, will, banking in a way that works across generation. And if you want our help in setting up the Swiss private banking, feel free to reach out and we can create a solution that suits your needs the best. If you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.